Gaurav, look at the Nifty chart. I will take a view on that. Meanwhile, let me welcome Abhishek Basu Malik, co-founder and fund manager at Sri Rama PMS, now joining in on the program with us. Warm welcome. Good morning to you, Abhishek ji, and good to have you with us. Well, we are back above the 25,000 mark. We were discussing last week with you as to whether we are comfortable to say that a bottom has been formed and we could be inching higher. So far, this week has been pointing out to higher highs, and that's also led by a lot of positive domestic news flows that have come in with respect to GST rationalization, etc. How are you looking at this fresh wave of buying emerging on the markets? Will it continue to sustain?
Well, good morning to you and all your viewers. I think, see, the buying has come because the market was pretty much oversold. Everybody was, in a pretty, everybody was pessimistic. Now, if you look at what is actually changed within the last couple of weeks, you will realize that nothing really has changed on the ground, right? The only fundamental factor that has changed is the S&P upgrade that has happened. GST is still, I mean, it's just conjecture right now. There are no, uh, actual data points which has come out. There's nothing which has happened on the ground. Secondly, I think we are yet to see if the 25% additional tariff is going to happen or not, and we are actually inching very close to the timeline for that. So I would expect that there is going to be another bout of volatility as and when we, get closer to the, I think, August 25th or 27th, whenever that date is, right? So again, uh, we could be again in that zone of turmoil and uncertainty in the next 1 week.
Hey, got that. Let me quickly just take one view with Gaurav as far as the markets are concerned, and we'll come back to this broader discussion with you again. Gaurav, first 15 minutes of a candle is formed. We've started off on a volatile note, but we are still holding on above 25,070, 25,080 odd mark. What exactly would your thought process be today, being the weekly expiry? What should be the strategy then?
See, Nifty is just coming down after its opening to fill the gap, what I can see currently. 25,050 is the level where the gap ends. So I think that level is likely to be tested. Till the point market is holding above 25,000 odd levels, we are clearly bullish from an intraday perspective, from a positional perspective. Even 100-point dips from these levels will get Nifty to an attractive level. And we again maintain 25,200 to be our first immediate target, which is still even the gap up levels, even the opening levels, the Nifty went up to 25,144. So still a lot of room is there. So any dip, I think we are more comfortable at it.
Okay. Abhishek ji, you were talking about the GST, rationalization news flow. That has been largely the key reason why the markets have been pretty buoyant over the last 3-4 odd trading sessions. How would you really look at the impact on some of the sectors there? There's already a broad understanding of the proposals that have gone in from the government to the GOM. The GOM has been meeting since yesterday. There were some news flows on insurance aspect yesterday that are giving us an indication that the GOM is likely to propose to the GST Council that there could be a complete exemption on individual insurance, both health and life, from GST, which means that these two insurance policies that were so far being taxed at 18% rate on GST might be actually taxed at nil or zero. How would you look at this, in case this actually comes into the final print of GST Council? Is this a big positive for insurance companies? And I think, the key point will also be to understand whether the government will be able to ensure that some of the benefits definitely come down to the end consumer as well, because the entire idea is to make insurance products affordable for the consumers at large, and premium costs have only risen over the last couple of years. So reduction in GST on the one hand, how will it impact at the end point?
So, very interesting point. Now, if you look at what the insurance industry is saying, is that they don't want a 0% GST, right? And their rationale is that the moment you take 0% GST, they do not get any input tax credit. So, in effect, what might happen is that the cost of the insurance companies will go up because they don't get any input credit, right? So it remains to be seen. The industry is actually asking for, a 5% or some kind of small taxation where they can get the benefit of input tax credit. But on the broader point of GST rationalization, I think it's a very, very welcome step. I think it's very needed. We have been, in this GST regime for slightly less than a decade, and GST numbers have more or less now uh, got to a stage where the government is sanguine about the amount of money coming in. So it's probably time that we rationalize the number of slabs, and also reduce the overall burden of taxes on people, because mind you, GST is unlike income tax. uh, GST has to be paid by everyone irrespective of income, right? It's an expenditure tax. I mean, obviously, it has its merits in a country like India, where raising income tax is always going to be, politically challenging. But if you are able to reduce GST, then you definitely give some boost to consumption.
Okay, got that. So that's the overall understanding of as to how the impact will be felt across the players, who are into the business of insurance, and what kind of an impact can the end consumer also impact. Of course, we will wait for the clarity to come in. But Abhishek ji, any other sector that you believe is likely to be a key beneficiary of the GST rationalization?
I think the entire consumption, sectors, whether right from groceries to pretty much everything. If we see a rationalization, see, right now the discussion is about the lower slabs, right? The 12% and the 28%. Now, in those slabs, you have roughly about 11% of GST coming in, which is not much. So, if the government really has to make a dent, it has to reduce or bring some from the 18% slab, which is where probably 60-65% of the GST comes from, down to the lower level, right? So if that happens, then again, the devil is always going to be in the details.
Yeah.
But there is definitely going to be a significant push in consumption sectors. And I think the government intention is also that they want consumption to boom, because then it also has a sort of trickle down effect on the overall economy.
Okay, so Gaurav, what's your sense on the consumption-oriented themes like FMCG, consumer durables, for instance? These spaces have again been, laggards in the markets. They haven't really given any sorts of returns this year so far. Many have also been dragging for many, many months, quarters. No enthusiasm in the earnings as well. We're again at the brink of the festive season with this GST rationalization coming through. Do you think it could be a good time to look at some FMCG stocks and consumer durable stocks now?
Well, of course, Sakshi, what we have seen is the FMCG has not performed in the past 6 to 8 years. Some have not performed in the year or so. But what we are seeing of late is stocks like Hindustan Lever has started gaining in momentum. The past couple of sessions, we have seen the stock rallying from a level close to 2400 to 2600 plus currently. We expect this upside momentum to continue going forward as well. And in the next couple of months, a level close to 2800 to 3000 can also be seen. So I think a large cap stock like Hindustan Lever at these levels is pretty much attractive. Apart from that, white goods companies like Blue Star is available at very attractive levels. We are pretty much optimistic that this particular up move and the GST rationalization will provide a boost to this industry. On the technical charts, also the stock is looking pretty attractive. A complete cup and handle formation is clearly visible. Therefore, we expect a level close to 22.50 in this stock coming in the next couple of months. Apart from this, stocks like Hevels and Polycab are also available at attractive levels. Havells were having a toll just because the summer season were not that extensive and the monsoon season came in early and good monsoon were seen, leading to less sales of air conditioning. The Lloyd brand is were having a toll. Now, when the GST cut would be seen, it will be a clear advantage for Havells. Therefore, a stock which is laying low from quite some time should gain momentum, and it is available at a very attractive price point now. 1380, 1350 are important supports for that stock. Currently, the stock is trading close to 1550 levels. I think from anyone who wants to take a position of 6 months and more, Havells is at a very attractive levels and price point close to 1900 to 2100 can be expected in this time frame.
Fair point. All right, Gaurav, we'll leave you at that note. Thank you so much for being with us in the morning edition to share with us all your views on the markets and various pockets that we've discussed. Meanwhile, viewers, we'll continue our
Thank you.
conversation with Mr. Basu Malik there. Mr. Basu Malik, apart from the sectors that you marked out, consumption-oriented sectors, FMCG, consumer durables, what other sectors could be in focus because of these GST rationalizations? Do you think even autos is something that you're looking at? Are you also looking at maybe travel, hospitality? There could be some rationalization there also that's expected. These forms of consumption, are they going to be looking attractive?
The auto and auto ancillaries obviously probably is expected to be the biggest beneficiary. So there's definitely, and especially in the say the two-wheelers and the small car segments, there could be very significant benefits that a consumer can get if the GST is reduced. So definitely auto ancillaries is a very interesting industry to look at when the final GST rates come through.
Okay, got that. So that's the auto ancillary basket. Let me just mark out for all our viewers what's moving in the Nifty 500 basket. Some strong stocks there. New India Assurance, meanwhile, from the insurance basket is up by about 9%. Look at a GMDC, that's also up by 5.5%, 6%. Happiest Minds is up by 6%. Commercial engineering is also up by about 11.5% higher in trade. Swiggy is up today. Smart moves being seen about 4.5% higher on Swiggy as well. Look at even Anil Ambani stocks, Reliance Power, another day when we are seeing smart move of 4.5% higher. India Cements, there's a trigger that we already discussed earlier on Ultratech Cement and India Cements. There's also Prestige, PVR, all of these stocks that are also hovering higher in trade. Any new stocks at 52-week high? Yes, there are. India Cements, Asahi India Glass, Godfrey Phillips, which has been a consistent mover, is also hovering higher on a 52-week high level as well. Which are the hourly gainers that we see in the first half an hour of trade? Clean Science is in focus. Remember, there's been a big block deal today, so keep that in mind. GMDC is in focus, 3.8% higher latent view. PG Electroplast is also improving. I think this is one stock that we can discuss. Abhishek ji, PG Electroplast, we had seen that over the last couple of weeks there was a substantial cut on prices on PG Electroplast since the company came out with reduced guidance on both revenues and profits as well. But slowly and gradually, the company is finding its feet again. One of the key triggers also could have been, China easing out on the exports of rare earth minerals, something that impacts all the EMS related players, EVs related players as well. Since that time, we've been seeing some uptick come through. What's your sense on the entire EMS basket, the likes of PG Electroplast, Amber, Dixon, Keynes right now?
Very positive on all of them. I think, personally, I think manufacturing is one of the key themes, not only for India, but I think it's something that the government also is focusing on.
Yes.
And for manufacturing to work, I mean, there are different industries or different aspects to manufacturing, but the EMS players are a major component of the manufacturing play, and they are slightly different from the traditional capital goods and engineering companies. These guys or these players are more replicas of the Chinese behemoths. So they are very large volume, low margin players, and I think all of them they have a decadal kind of opportunity to scale up, because the scale is what differentiates them from the others. So I think all of these players, whether it is PGL or Amber or Canes or Sirma or all of these players in this space, they are in different pockets of manufacturing. So, for example, PG is more into ACs, refrigerators, and they're now getting into other stuff. So the price fall, etc., that happened was primarily because uh, of the uh, problem in the AC segment, right? And uh, because the fact that we have had early and persistent monsoons across the country, uh, the summer has not been that scorching, and consequently AC sales have suffered. But if I look at it from a slightly longer time perspective, couple of years, 3 years, 5 years, you will find that ACs, refrigerators, washing machines, these, the penetration of these in our households is going to continuously go up. And PG is one of the dominant players in that market. So, you know, there will be once in a while, short-term knee-jerk reactions to short-term news. But overall, I think this is a theme which is going to be very important uh, for the next 5 to 10 years.
Okay, got that. So that's the EMS play, viewers, that you could probably be looking at as well. Let me also bring up, some of the other buzzing spaces. Real estate, we were discussing this with Gaurav also. What's your sense on the real estate pack right now, a slow mover until now? Any fresh moves or fresh triggers for re-rating to emerge again on real estate pack?
So I think real estate will do well because we are probably in the mid cycle of the real estate uptick right now. I think the next big trigger will happen maybe 6 months or a year down the line, where uh, the next pay commission comes in. So that could be a
Yeah.
very big trigger. In the interim, I think lower rates, that when it gets passed through, lower income taxes, those will sort of also help in real estate. But the challenge with real estate, especially in the larger metro areas, is the prices are significantly rich in prices of apartments, flats, buildings, etc., right? So uh, if I look at it from a common man's perspective, most real estate is uh, you know today is being built for the rich. And so the affordable housing, etc., is not getting that much of traction, uh, probably because land in India is so expensive. So that is one area where I would hope that the government, both central and state, look at, because real estate is one area, if we can get it right, can create a very very long term sustained economic development for the country. Because just if I look at the parallel with China, I mean, China had a large part of their boom because they were steadfastly developing the real estate sector.
Okay, fair point. Towards the end of our conversation, Abhishek ji, highlight for us, for the rest of the year, any key triggers that you believe are going to be extremely important for retail investors to keep an eye out on, and that could really swing the way the markets go or probably create some opportunities for them to invest over the next 6 months.
See, I think few things we need to keep watch out for. Obviously, the top of the list is Donald Trump. The second is, I think, oil prices and inflation and how it pans out, and consequently, RBI rate actions. Uh, uh, we all hoping that we will see one more rate cut, maybe two more rate cuts during this year, because inflation has sort of really fallen a lot. Growth is also not picking up, so the RBI does have some space to cut rates, so that could give a fillip to the markets. And overall, I think we need to keep looking at the industries and the sectors where there is sustained growth. I think if we just keep things simple, look at where growth is coming and look at the overall macro picture, I think we should be fine.
Fair point. Okay, Abhishek ji, good to be speaking to you as always. Thank you so much for your time, and we'll hope to catch up very soon with you again to really see how some of these triggers that you marked out come into shape of the next couple of days as well. Thank you so much for being with us.
Thank you. Sure.
40